morning. My name is John DeMajo. I am the CEO of Graphex Technologies and the president of Graphex Group, the Graphene division. We are a midstream processor of spherical graphite, primarily for use in electric vehicle batteries. We have current operations in mainland China. We are, however, a Cayman Island company headquartered in Hong Kong with a U.S. subsidiary headquartered in Michigan.
There we go. John, lovely to meet you. Thanks for coming on the show. I think we caught up with Dan and I back in August last year, so it might be worth going over a few bits of vocabulary and a little bit around the business plan. Okay, so spherical graphite, it's used for what again?
It's used for electric vehicle batteries. Batteries are comprised of the cathode, an anode, an electrolyte, and a separator. In simple terms, graphite is the primary element that comprises the anode in almost all electric vehicle batteries. So where there's a lot of attention and press and concern about the cathode materials, lithium, cobalt, nickel, manganese, graphite is more or less the working man in the battery. It provides the anode material for, again, almost all of the electric vehicle batteries out there. Right.
Okay. And again, just sort of help us understand the whole kind of China versus US component here, because you're on the OTCQX at the moment. I think there's discussion around listing on NYSE. You're also listed in Hong Kong with operations in mainland China. Is that cause for concern for your investors or investors that you talk to?
Yeah, well, I mean, realistically, on the graphite side of the spectrum, 80% of the graphite that's currently mined on the planet is mined in the northeast province of China. So it only made sense for us, to have location close to that resource for processing of that graphite into battery anode material. There are, geopolitical concerns. There are supply chain concerns, and those are widely known. And Graphex as a company had already started to address that kind of concern and the proliferation of electric vehicle manufacture that started to pop up in the US and in Europe as well. So we were already underway to expand and diversify our footprint when a lot of focus, became apparent about domestication of the supply. So is there a concern? Well, yes, there is, right? Again, for the reasons I mentioned, geopolitical and supply chain. But the reality of it is you're not going to domesticate that entire supply chain overnight, right? So what we're doing as a company is disarticulating that process one piece at a time. The processing of graphite is really a two-step process. It's the shaping and purification, and then it's what's called pitch coating, which really turns it into that anode material that electric vehicle battery manufacturers need and want. So what we're doing is disarticulating that finishing process into Michigan in the coming 12 to 14 months. And then we will disarticulate that first part of the process, the shaping and purification, as that makes sense to do. The mining of graphite is something that, A, we don't do it, but B, it can only be done where graphite actually exists, right? A lot of it, as I mentioned, is in China, but there are resources now online in Mozambique, coming online in Brazil. Canada is making a big push to become the battery of North America. So we're in discussions with all of those locations as part of our diversification plan, but also in support of a global diversification plan.
Okay. Tanzania too, another good one. Diversification, let's be clear about what that means, because you produced, well, when I last spoke, 10,000 tons of this stuff, aiming for 40,000 tons out of China, right?
Right.
You're going to need to diversify quite a bit to kind of play catch up there. So in terms of that ramp up and how you do it, are you talking about JVing or working with, from a technical perspective, companies ex-China? I mean, how do you do it?
Yeah, that's a great question. So in China, we are, as you mentioned, we are going to expand from the 10,000 metric tons to 40,000 over the next 3 years. And that supply will basically be consumed within the Asian electric vehicle market. And that makes perfect sense. On the diversification side, to diversify that upstream supply chain, we are in discussions with mining operations in those various geographic locations to create joint ventures. So for a number of reasons. One is to where it makes sense to process the material as close to the mine as is practical. Where infrastructure exists, you need power needs and logistical needs to get the material moved around. But also, the value chain for graphite goes up significantly from the mining operation to that first level of processing to the finished processing. There's a tremendous increase in value. So the joint ventures are structured whereby we as a company, gain access to that raw material supply. And what the miners get out of it is participation in that upstream, in that downstream supply chain and the value creation. So, each situation is unique based on geography, mining resource, amount of material, et cetera. But that's the overall kind of push, is that there's a win-win for everybody involved, right? And because, there's so much activity around supply chain concerns, it's not out of the question that we would have a three-way conversation between a mining operation, a company like ours to do the secondary transformation, as it sometimes is called, and to have a third party, maybe be a battery manufacturer or even an OEM that is interested in locking down, future supply.
Right, but that's more on the finance side, whether it be offtake agreements or whether it be pre-finance,
correct,
as it were. So. Okay, well, you can tell us more about that as and when that happens. But now I'm just trying to understand the cookie cutter model, which you want to do. So, are we talking about your technology partner, or is it a bit more than that? Because if I've started to hark back to conversation with someone else in your organization, Dan, back in August, but we talked about 50 million in revenue, 40 million of which came from the architectural design component. So what is that bit of it, that 40 million contributor? Is it integral to what you're doing on the technology side with the spherical graphite technology? Or, how does that all intertwine? How does it work together?
Yeah. So is the question about the contribution from the landscape side? Or?
Yeah. The landscape side how does that work?
Yeah, so the parent company, has not only is it the Graphene division, which again I'm president of, but there is the landscape architecture, and at one point there was a catering business. Now both of those other businesses were impacted severely by COVID, right? So the catering business has really been downsized, to the point where it's a negligible part of our revenue. The landscape architecture business it's an award-winning business, and it's really the foundation of the original company, and that is contributing, and it is profitable. But Graphene division by far is dominating the revenue, and that is really where the focus is.
What's that look like now then? Because it was out of 50 million, 40 million was the landscape architect. Now, and 10 million was the graphene, right? So has that changed dramatically in the last 8 months?
It has changed dramatically. The graphene division is about 66% of revenues. Again, around 50 million in 2021. Our annual report just was published. It's available on the website. So yes, the graphene is starting to overtake. And with these expansion plans, we anticipate that it's going to be the primary driver, of the entire company going forward.
Right. So in terms of skill sets, very different parts of the business, but you're not going to separate them out. You're not going to spin it out in terms of clarifying the narrative or simplifying the message.
Yeah, so that was part of the establishment of the U.S. subsidiary in 2021, was to focus on the graphite side of the business, graphite and graphene, and primarily graphite.
So we should be focused on Graphex Technologies, the US subsidiary. Right. That's what we should be looking at, right? Okay, gotcha. So what's that equate? 66% of group revenue equates to what?
Yeah,
35 million.
66% of.
How much? What's that in dollar terms?
That's
35.
About. Yeah, exactly.
Okay, cool. Okay, so that's where. So that really has grown. That's starting to motor for sure. Most of that coming out of the Chinese part of the business at the moment, for sure.
Right. Currently, 100% of our productivity is in mainland China and being sold into the existing client base within China, which is expanding, right? Because there is electric vehicle proliferation all around the world. We talk about most of it, we talk about here in the US because we always talk about ourselves. as what's happening here in the US and in Europe, but the Chinese market is growing as well.
Just so I can park up the Chinese bit and talk about the US, because I think that's exciting. But going forward, is it as simple as saying 10,000 tons equals $35 million, 40,000 ton target in the next 3 years equals 4 times 35? Is it simple as that?
I think it's safe to say that. It's safe to say that. I think we will see, some potential increase in pricing just based on elevated, demand. But I think that's a good rule of thumb.
Okay, well, I'll tell you what, John. Let's bounce over to the US, okay? Because your role there is to expand into the US and Europe a bit, but let's focus on the US, because there is this whole critical minerals conversation going on, mineral security and this kind of domestication of supply chains, given it feels like deglobalization of recent events, Russia, Ukraine, and obviously China itself. What does that mean? What market are you specifically looking at? What conversations do you need to have to drive revenues, to sell technology, to find these partners? What exactly are you doing?
Yeah. So, the end consumer for us is our battery manufacturers and electric vehicle manufacturers, and they run hand in hand. So, you have GM working closely with LG, you've got Ford working closely with SK, et cetera. So our customers are both of those entities, right? And again, it would normally be strictly the battery manufacturers, but because there's such a focus on securing supply chain and having enough material to meet the ambitious goals of electrification, right? So General Motors going to be 100% electric by 2035. When you back that into how many vehicles that means and how many pounds of graphite you need, so GM is getting directly involved, as is LG. So our conversations are with getting our material qualified by these auto manufacturers to make sure that it meets their technical requirement, right? Because it has to perform, in their electric vehicles. So getting our materials qualified. So those are the conversations that we're having is, we can supply it. First of all, we're not a startup in this space. We've been producing spherical graphite for almost over 10 years now. We're selling it commercially for the last 8. So we're not a new technology provider. We're not a new startup, and we're not a new technology. So we're a proven technology with capability to perform at high volume. So 10,000 metric tons is a fair amount, right? Going to 40, that's really just 4 times what we were doing. So again, it's not that what I'm trying to say is that there's not a lot of risk in our expansion plan. So our conversations are, we can meet the quality spec, we can meet the quantity spec, and we have stable sources of supply.
Right. Okay. So this isn't a case of lab test, pilot test, demo. You've been doing it for 10 years, but 10,000 ton produced in China. Where does that go? Doesn't that stay in China?
So that stays in China. So that's part of again, and we can expand. We have a flexible, and I think it's an advantageous kind of a footprint, right? We provide midstream processing. We already have an established supply chain in China. So if there's a need for volume into the US, we can upsize that operation to provide it. That is a meeting a need. The other part of the need is that, again, that diversification, away from China, which is a desire of many of the manufacturers here in the States. That's where the relationships with other resources and other geographies make sense, right? So that we can have a supply chain. Now, there is one resource, limited resource in the US for graphite in Alabama. It's not online yet. And, it's not anybody's guess, but, it's not going to be online tomorrow. So no graphite will be sourced in the US for the foreseeable future. So we are looking at Canada as our closest neighbor, right? We're looking at securing offtake agreements with material there. Again, Brazil, Mozambique, other places where we can bring in non-China supply and process it into the material.
Okay. Understood. So you can ramp up in China, but the likelihood is you could find a home for that increased production in Asia.
Correct.
Molecules travel least distance makes more sense. The bit that kind of, I guess, would excite the market is, can you find a supply? Okay, Alabama's not going to be online anytime soon, but you've got a couple of big Canadians. I think talked about merger recently, and work with them. I mean, have they solved the problem technically to be able to produce spherical graphite? They certainly talk the language of. So, is there an opportunity there, or do you have to trot off to Africa? Because we've seen this happen with Canadian companies, buying cobalt supply, but actually processing it in Canada. And likewise, I suspect there'll be more agreements like that happening. So how do you get the supply that you need, and where do you process it? Is it best to process it, as you said, for China, right by the mine? Or can you possibly see a case for exporting it to North America and then processing it there? Because you talk about domestication of supply chain. Well, domestication may not be possible in its truer sense. You may have to create a hybrid version. So, what does it look like in North America for you now in terms of the opportunities for you?
Yeah, and that's an excellent question, and that again I think speaks to the what I like to say about what we're doing is we have the ability and the agility. Right. So if you think about the processing of graphite being a two-step process, again, shaping and purification and pitch coating, is ideally you locate both of those in the same location for obvious reasons. And that location can be close to the source if it makes sense. Right now, mines are sometimes far away from infrastructure, but you can be at the same location, or you can be nearby, near a port, near a distribution kind of center where you have access to the things we look for are reasonable cost of energy, because it's an energy intensive process, right? Infrastructure, other infrastructure like, transportation to get materials in and out, and labor force, right? So if you're mining in, deep into the interior of Brazil, do you locate your processing plant near the mine or maybe near a port? Right. Those are the analyses that we do. But to answer your broader question about domestication, you're exactly right, and that's where the industry as a whole is very not to say fluid, but we all know that we need the raw material and we need to produce anode material. What happens in between is a function of where does it make the most sense to do it, and what is the life of the resource, right? Are you going to build a plant if the mine only has 3 years left in its production, life? What's the cost of energy in Quebec versus, Warren, Michigan? So those are the things that factor into it. But overall, what you're trying to do is, locate the finishing plants as close to the point of use as possible, so you can almost have just-in-time delivery, which the automotive industry is used to. You can have that shaping and purification process. One of those plants can feed multiple finishing plants, and one mine can feed multiple spherization purification plants. So there's a strategy that has to match the timing of the production of the mine. So you mentioned Canada, right? There is a merger that just happened. Obviously we're interested in discussing with those folks about the possibility for a collaboration, right, to secure that to provide the expertise that we do. Which is that secondary transformation, right? That's something that we're proven and we're tried and true at that. Does it make sense to get into a collaboration with mining operations where they stick to their knitting, produce the material, and we stick to ours, produce the anode material? And there should be room for collaboration there. Well, that's what we're finding.
Well, I think that's the interesting bit of the conversation, because when I talk to the mining companies and miners talk to me about moving downstream, without having done the technology bit before, as an investor, it always makes me nervous. And you can brush it away with saying, we'll hire the right people, the right experience, it'll be all fine, but it invariably never is. And likewise for you, we'll go and find those companies and have those agreements with them. It's a competitive environment, so you can both operate separately from each other, I'm sure, but coming together is the hard bit. Who does pay for the pilot plant and the demo plant and then the commercial plant, and what do the economics look for? Do they see you just as a technology, an IP, in which case, how do they value that versus how do they value their own graphite coming out of the ground or whatever commodity coming out of the ground.
Right.
Those are complex discussions which take time. See, but you don't need many of them to get over the line for it to work for you. So again, I appreciate the complexity of all the optionality you have on the table, but how do you go and get that first one over the line and say, look, it's working in the US. We've got a case study here. We've got one project. It's working. And what scale do you need to go for to prove to the market that you're someone to, take note of?
Yeah. So getting the first one is really, as always, it's a combination of things. Is the material being produced, right? So again, we are in discussions. There's certain ones I can and can't really talk about, right, because of either NDA or where it is, where we are in those discussions. But your point is taken, that there is interest in some mining operations to explore the value chain downstream. It doesn't seem like it would be rocket science to do what we do, but it is not. It's not something that you do. You don't fall out of bed processing graphite into anode material, right? We're talking about microscopic particles that are coated with microscopic amounts of asphalt, et cetera. So it's part art, part science that we've perfected. So it does make sense, and I think people are recognizing that speed is critical, right? So does it make sense to reinvent as a mining operation? Does it make sense to get into the secondary transformation, or does it make sense to connect with a company like ours that already does that and work through the financing, the revenue sharing, et cetera, so that everybody wins? The good news about that, is that it is a rising tide for everyone. So there's demand on the other side that is not going away anytime soon. So it doesn't eliminate risk by any means, but it does mitigate that to a large extent. And, again, everybody involved in these is intelligent. So we all know that there's, it's important to build these things economically, right? To not just throw caution to the wind and build a plant anywhere you want. You have to have those critical elements: power, labor force, right? Logistics, and come to an agreement. So I'm not sure if I'm answering your question directly.
No, you kind of are, and you are. But I just want all the options on the table in terms of what the makeup looks like. I mean, you want to go to OEMs and say, hey, we're doing it over here, and you can buy it from us, from our Chinese product, but more likely it's probably going to go to the Asia market. But we can replicate that here. Look, feel the quality of this. We can replicate that here. We can walk into a miner with the assurances that there will be an offtake for this product, or there could be an offtake for this product, or some kind of pre-finance structure, which will give them some comfort. Because there's always that catch-22 for the miners, when they get to the point where they say, well, we've got a product and we can take it so far, but there's one or two people who sit between us and the OEM or the battery manufacturer, because they don't necessarily always have the in-house as well. So if you're there to open up the US market or North American market, so I'm intrigued in that. Is that an option for you guys? What are the discussions? I'm intrigued.
Well, the discussions are, when we announced that we were going to be, locating that facility in Michigan, it garnered a lot of attention, and we've had a lot of conversations as a result. And those conversations are ongoing. There's, and quite frankly, in this industry, there's a lot of talk, right? And talk is not only cheap, it's almost worthless, because, can you back it up? It's one thing to say you're going to build a plant, but then will that plant produce the material that is usable? Right? I think we've been able to, and we're in the process of walking that talk, right? So we know our material meets the specification that we produce in China. All we have to do now is replicate, and we're very confident that that's doable. It's the same equipment, it's the same process, it's the same technology. It's the same folks that have perfected it are going to be, doing it here. So, there is caution on the other side, but that caution is being also assuaged with the fact that we have a track record, that we are doing what we said we're going to do. Because again, there's a lot of talk about capabilities, right? It's one thing to produce material that we produce at a pilot scale or a lab scale, but running it at 10,000, 24 hours a day, producing 10,000, 20,000, 40,000 is not something that everybody can do or maybe would even want to do, right? So that's what we've focused on. That's, again, we stick to our knitting, we do what we do, and we know that it's a invaluable part of the supply chain that everyone's discussing. So, we know that it's going to bear out. We know that it's going to prove out. And we will, we're in very many discussions all over the globe, basically, to, again, be able to provide uniform, consistent material at high volume to wherever it's needed.
Okay, so 10,000 tons is a lot, and you can do it. And technically, we don't have to have a technical conversation because you can do it. You're selling into market already, and you can ramp that up in China. Right, no problem. What's the competition like ex-China for you guys? So when you're walking into a room with whichever OEM, whichever battery manufacturer, ex-China, you've got how many people can technically deliver or have shown that they have, not talk about maybe we can, have technically delivered spherical graphite into market at scale?
Yeah, ex-China, particularly speaking about the U.S., there's no one yet. Sierra has a mining operation in Mozambique. They've announced, and they're in process of building a plant in, I think, Louisiana, to perform and I think they have it functioning at I don't know what the volume is, but it's not extremely high, to produce the anode material. So they have a good end-to-end kind of supply line. Expertise, I don't know, right? They've been in a mining operation for a number of years. I'm not sure how much expertise they have in the secondary transformation. Other than that, I think there was an announcement recently from an Alaska mining operation that was going to team up and look at locating a facility somewhere in Washington State. But other than that, there really is no domestic supply chain in the U.S. There's definitely no mining, and there's currently not anyone producing a significant amount of material, that can provide. Put it this way, Matt, there's 188 gigawatts of gigafactories that have been announced here in the U.S. over the next couple of years. That's about 188,000 tons of graphite to feed that. So, even at 10,000, 15,000, we're barely making a dent, right? So what we're talking about is replicating, that. And if you think about our production facilities in increments of 10,000, we can, theoretically, right, locate, operations. If you have mining operations, we can, going back to something I said earlier, we can have the primary process, upscale to 10, 20, 40, 50,000 tons, depending on the production that we get out of the mine. And then that material can feed different finishing plants near different gigafactories down in the States or, in the States, to again, feed specific auto manufacturers per their specification. So that's the capability. It's not a question of if you build it, they will come kind of thing. We, of course, are looking for supply agreements with OEMs, with battery manufacturers to help, justify the build out. But we're very confident that there's demand. And once we get through the qualification process for our material, we think that will, that will kind of, that will be the missing, or the piece that drives, it'll just fall into place, right? That will be.
And what do you see? It's just a little bit, get a little bit technical. So when different graphite producers will have slight variances there. I mean, you've got to just tweak your technology slightly each time, but that doesn't necessarily add years. Is that a case of months? I mean,
exactly. Right. And that's going to be that's a great question. It's going to be it's a good discussion to have with the EV manufacturers, the battery manufacturers and the automakers. They will look at every different, piece of that supply chain as unique, right? So if it's Chinese graphite being, primary processed in China and then finished processed in Michigan, they'll look at that differently than if it's Brazilian product coming into a Canadian operation and then to Michigan. So they're going to look at that differently. And I think that will be a qualification process, but it won't take years, right? I think once we get to the point where it's proven out that regardless of the source of material, the end product is uniform, right, or within tolerance or acceptable, then that will open up the capability for high volumes, to meet the demand. But I'm not discounting that. There definitely has to be a qualification process for safety reasons, right?
Well, for sure, and as a more technical product as well, in the sense that so is lithium, whereas the kind of some of the base, the nickel is nickel kind of. If it's X purity, we're fine for. Everyone is happy with that. So I'm sort of intrigued by that part of the process in terms of what it asks the cost, what it asks the time frame, and like I say, the economic makeup. How you split that is that's always going to be the $60 million question.
Yeah, but you touched on something because when we get the product from the mines, it's 94 to 96% carbon content. We have to get that up to 99.95. Right. So regardless of where the material comes from, the only difference will really be in that 0.005 of the carbon. So, how much difference will that make? I mean, I think that's something that we will have to prove out with the battery manufacturers. But there's a pretty high confidence that pure carbon is pure carbon, right? And once we have it to that point, then pitch coating it, right, creates basically a uniform product. So, we are procuring materials from these different locations. We are going to run it through our process. We are going to prove it out, and we are going to work with the manufacturers and OEMs to satisfy that requirement. We're here to support, we're obviously a business, we're a for-profit business. So we're, of course, very interested in growing our volume. But really, we are here to support the electrification of mobility, for the good of the planet. So we are willing to do what it takes, research and development. We're not just, grinding out tons and tons of graphite. We're, looking at different technologies, again, mostly in the graphite sphere, graphene, sodium, lithiumization of anodes, et cetera. So we're keeping abreast. We're trying to be, we're trying to provide some thought leadership in that because we have a lot of expertise. To be good at what we do, we had to be good at understanding mining operations and what they face as challenges and what kind of, impurities, they may have that we have to filter out, et cetera. So we're very, involved in this, from end to end, understanding what the battery makers, challenges are, and in some cases offering our inputs into, the battery chemistries, right? So we're not just, what we do for profit is sell graphite. What we do as part of an industry ecosystem is provide, share the benefit of our technical expertise, which we have a deep bench on both on the mining side, upstream and downstream in the battery side.
Well, John, I appreciate you coming on the show. I think we had a little romp around the world of graphene, graphite there. So thanks for the catch up. It sounds like you've started a process in North America, which is exciting. I guess you're going to replicate that in Europe at some point, and things in China continue to go well, certainly in terms of the increased revenue they have for sure. So thanks for your time. Stay in touch.
Yes, thanks, Matt.